just to kick off, I really, again, appreciate everybody being here. I know everybody's busy managing your agencies, dealing with your clients, selling policies. So thanks for taking some time out of your day so you can learn a little bit more about this new product we have on our platform. And let's be honest, a relatively new product to the market, considering most of our products have been around for well over 100 years. It's fun to get to touch something new. Now, if you've been following along our webinar journey here with cyber, we started off with why do people need a cyber policy? And then we kicked into what does a cyber policy cover? How can you quote it at Attune? Why coalition so special? We've talked about how to read and interpret a cyber risk assessment. And we really this week wanted to dive into objection handling, right? You can be polished up and knowledgeable about this product, but if you're unable to speak in your client's terms and overcome their objections to why do I need this, all the quoting isn't going to do you any good anyway. So I'm really excited to dive in here. I excluded the slide this time because I feel like a lot of folks here know me, but if you don't, my name's Brennan. I'm our head of account management over at Attune. If you work with Attune, you probably deal with a lot of my account managers and sales reps day to day. We have a great team. They're all very knowledgeable about our product and know that we're here to help you. We're here to support you. And we want to help you adopt this. And as we say internally, build some muscle memory around offering cyber to your clients. So before I jump in, I'm just quickly checking the chat. Great. We are good to go. All right, my friends. So let's dive right in. So we really want to help you build your expertise and be able to call yourself cyber savvy towards the end of this. So we know that your role is evolving as clients navigate this changing landscape. And our cyber savvy program is really here to help you build expertise and, like you said, muscle memory around not just cyber liability, but digital risks. And digital risks are our perils here, right? And it's a totally new set of perils. So we'll be here to help you interpret and understand how that functions, how proximate cause still works in the sense of a claim, and really build out your explanation to your clients. And as we so eloquently put here, we'll elevate your role as a risk advisor. So before we dive in, I thought this was just an interesting stat. So the cyber insurance market is already large, but we expect 25% growth and up to a $36 billion market by 2028. And I'd say this is one of, if not the fastest growing commercial insurance segments globally. It's driven by the increasing realization that technology is truly the lifeblood of not just your business, but your insurance businesses. But we need to understand that adoption is still pretty low. 64% of small businesses aren't familiar with cyber. Only 17% of small businesses have a policy. And I think what was most intriguing to me is from some internal polling data, we found that a large majority of the small business owners that carry a cyber policy have had something bad happen, like an incident or a breach, before they chose to purchase a policy, which is very telling. Imagine the homeowner market if people only bought homeowners insurance after they had a fire or a sewer backup. So, despite rapid growth and many organizations being concerned about being hacked, nearly 2/3 of these orgs are totally unfamiliar with what cyber insurance is, what it covers, and this presents a huge opportunity for you, our agency owners, to deepen your relationship with your clients and really help protect them from new dynamic threats, which is also a bonus, going to help you expand your book of business. All right. So let's talk a little bit about claims and, client objections. So first things first, I'm not a target for cyber attacks. And if we think back to past webinars, we've discussed the difference between targets of choice versus targets of opportunity. And a quick refresher, when you think of a target of choice, think target. right? Target's a huge company. They have tons of consumer data, but with this high level of data, they have to have high levels of security, right? Whereas our small business owners, while they may not have as much data, we may not see as large of ransoms that they're hit with. There's much lower thresholds of security in place here. Next one here, we don't really rely on technology. Know that your insureds are at risk of a cyber attack if anything they use for business, including their email, touches the public internet. Some folks will say, I'm already protected from cyber threats. I'm thinking here, either they have like some Norton internet security, or maybe in a more robust sense, they have a low level, low limit BOP endorsement. What we know is, one, these like buy off the shelf security systems are just not enough anymore. This antivirus software is not going to help us if somebody inserts malware on your computer, or if they ransom your data or your client data. And then furthermore, I'd say, specifically speaking about a BOP endorsement, while having some coverage is better than nothing, we know that these BOP endorsements are relatively limited and oftentimes are pretty behind the curve on what's happening day to day in the cyber threat market. Again, I think that also encompasses, I already have coverage in my existing policy. And then the last one here, which I think we're all probably somewhat used to overcoming with any policy, is cyber insurance costs too much. And I think this is really where, when I think about it, this is where our cyber risk assessment really comes in and helps us sell value. Hey, Morgan, I understand that you feel $680 a year for a standalone cyber policy is a lot. The reason I recommended it to you at this limit is because the average claim size for a ransomware attack in your industry is $163,000. I'd much rather we hedge our bets, you buy the policy up front, and if the ransomware attack happens, we know you're covered and you stay in business. All right. And hey, we'll dive right in here. I think I got a little ahead of myself talking here, but we talked through targets of choice versus targets of opportunity. We've also just seen this whole landscape evolve, right? These attacks are automated, and with a small business, the bar of security can sometimes be so low. It's much more efficient for a hacker to line up a long list of small businesses to attack, see what their success rate is, and do it on an automated basis. Unfortunately, for many businesses, regardless of size or industry, the largest exposures are those exploitable loopholes, or just lack of controls that these cyber criminals can really easily pick up on and monetize. It's especially true for our small business owners who really just lack the resources and expertise to keep up with these dynamic threats. We've seen a huge increase in these smaller companies being targeted. Small businesses with under 25 million in revenue were particularly vulnerable in 2021. We saw a 56% increase in the average claim cost, increasing to $149,000 by the end of 2021. Think about the impact that would have on one of your small business clients if they didn't have coverage in place. We also observed dramatic increases in the frequency of attacks. Small businesses saw a 40% increase in ransomware attacks and 54% increase in funds transfer fraud incidents. And these are only the organizations insured by coalitions. So this is internal data. So imagine what happens if you're with a carrier that doesn't have active monitoring. The stats would probably be a lot more wild. Really, we just need to keep in mind here, everyone's a target. The effects of the pandemic definitely contributed to the increase in claims frequency over the last 2 years. Larger orgs were more equipped to transition to remote work, whereas these small businesses had a much harder time securing their employees' remote access, especially if that's not something they've been offered before. It really leaves them to become ideal targets of opportunity and they're most susceptible to these automated attacks. Now, this one I wanted to dive a little deeper into because I think we get this a lot. Like when I initially was reading and working on some objection handling for this from questions we got from our brokers, I'm thinking like artisan contractors, right? Like the carpenter who shows up at your house to do some woodwork. We don't rely on technology. Like I've got a bandsaw and I guess I have my cell phone. But we know that technology is a critical part now of every organization, even just like logging in and using QuickBooks is an exposure to the public internet. So, truly every small business and other small mid-sized org that are taking advantage of digital technology to reach new customers and make their operations more efficient. Take like a small retailer, they maintain a storefront, but they also manage all their customer interactions in a CRM tool. They run their finances and payroll on a single laptop. They even manage like orders and inventory through an online vendor. It's easy to assume that the most vulnerable assets in the store are the items on the shelves. But what would be harder to replace? The physical items on the shelf or a digital list of customers, employee payroll data, and years of financial history? For a lot of these businesses, the value of the digital assets exceeds the value of their physical assets. And the shift to the digital age is still in very early stages. But the great news is this digital age has made it possible to create, run, and scale businesses faster and easier than ever before. I guess the flip side to that is the shift to digital technology has really created a new peril base for us to insure for. So let's talk a little bit about like some common tools that these business owners use that could be very easily exploited. We've got email, right? And the threat here is business email compromise, right? Think about clicking that phishing link. We have online banking. I told my wife the other day, I don't think I could survive without online banking and mobile check deposits. It's such a godsend. I can't tell you the last time I went to a bank. And then these remote services, right? Ransomware targeting, remote accessing services. Think about your CRM at the agency. If someone was able to promote in and see all the consumer data inside of your agency's customer relationship management system, we've got names, birthdays, social security numbers, driver's license numbers, addresses. That's all a hacker would need to take over somebody's life. And I think with these common tools, we find that there's catastrophic consequences when they're taken over, right? Looking at average claims here, $89,000 average loss from an email. From online banking, like funds transfer fraud, $118,000 average loss from our internal data in 2021. And then finally, ransomware targeting these remote access services, a $334,000 average loss. These average losses for ransomware, I don't know about y'all, to me, they're scary to think about one of them hitting your insured and they have a $50,000 Bob endorsement limit. That could really put somebody out of business. So let's talk like a scary example. I should stop using the word scary so much because we know we can protect for it. But a good but scary example of every organization being a target came in late 2020. Attackers compromised the email account of a nonprofit's finance director. 4 months passed as the attackers searched the policyholders' mailboxes for terms related to finance, banking info, payment, and fund request. Next, the attackers set up rules to move a series of legitimate emails from the policyholder's inbox into their junk folder. The attackers spoofed the nonprofit's legit domain, set up email rules to divert replies, and sent compromised attachments. They sent an email to 6 people facilitating 2 very large fund transfers of roughly $620,000 each, totaling nearly $1.3 million. Coalition sprang into action and coordinated with law enforcement to file a report, stop the funds from being transferred. Our incident response team also put in a takedown request to remove the fraudulent domain, preventing the policyholder from receiving additional fraudulent emails from that domain. Due to our swift response, we were able to claw back all of the money. It's pretty incredible. I can't imagine, even for a large org, I mean, let alone a nonprofit, right? A $1.3 million loss is terrifying. So, even basic technology like email, it's been around for a long time, can really make you vulnerable. And these basic tools you don't always think of as tech. Email, text messages are really easy to exploit, and the consequences can be dire. So let's talk through the next objection. I'm already protected from cyber threats. Antivirus and other security tools aren't always enough on their own, or they may even leverage cloud vendors, MSPs. I think the old adage that I think we've used in insurance for a long time. Some of my more cyber security based friends say it's a cyber adage, but I think it's an old school insurance adage. It's when something's going to happen, whether that's a fire, a sewer backup, hail damaging a roof, a slip and fall claim, or a cyber attack. So cybersecurity tools are only the first step in truly mitigating and managing this cyber risk. And while it's a good first step, at Coalition, we believe risk is more than a technology problem, and cyber insurance has a truly important role in helping mitigate and transfer that risk. That's because threat actors are going to find a way via your vendors. Putting the fate of like your IT infrastructure or security in a third party doesn't always guarantee your business's protection. Unfortunately, many managed service providers or IT vendors have become viable and valuable targets for these threat actors, just like other businesses, since they hold multiple keys to other organizations to really perpetuate attacks. By targeting, these MSPs, cyber criminals are able to further scale their efforts and gain access to a huge swath of an organization's most critical assets. Accepting third-party risk is like the cost of doing business online. Different partnerships or software could have inherent vulnerabilities, which could unknowingly put your business at risk. Also keep in mind, cyber criminals attack vendors, and through successful compromises in the vendor's digital perimeter, they can victimize a large number of connected organizations all at once. I like to say at Coalition, we don't just look at your business, we look at your 5 closest friends' businesses too. And there's insurance implications here, right? Managed service providers are tasked with securing multiple orgs, and if all their companies are compromised, do you think the MSP's insurance policies can have enough to cover everyone? Probably not. And we're definitely not going to have coverage for the employees, right? The ransomware and funds transfer fraud are the main ways that criminals immediately monetize cybercrime. They're going to use a wide array of attack techniques and tactics to gain access to systems in the first place. There's really no silver bullet or one size fits all to solve cybercrime or in cyber risk. As the sophistication of criminal activity evolves, so do the tactics these threat actors use. Unawareness and lack of vigilance is the human element or variable here. Social engineering leading to business email compromise, insecure remote access exposed directly to the internet, and third-party vendors targeted in supply chain attacks all lead to potentially catastrophic cyber events. And here's how criminals executed cybercrime in the past year. In 2020 data, we see the vast majority of attacks involve external remote services, typically a remote desktop protocol or virtual private networks, or phishing attacks like malicious emails, typically directing users to enter credentials in like an imposter portal that looks a little bit like Microsoft 365. We also saw in 2021, some data showed a spike in exploitation of public-facing applications. Unfortunately, this year saw a very large number of high-severity vulnerabilities in interfacing apps like Exchange, which we'll talk about in a little bit more detail later. But also a variety of like VPNs, firewalls, and remote access platforms like Citrix experienced a lot of exploitations. And I think what we need to focus on here is, while cyber criminals continue to expand their techniques, phishing and social engineering remains the most common tactic. And changes will happen. It's not an annual trend, right? Like the threat actors and hackers here are evolving at a rapid basis. And we do feel that Coalition's doing a tremendous job in keeping up with everything. Again, the old adage, it's not a matter of if, but when. Just like cybersecurity tools aren't sufficient on their own, cyber insurance is not a replacement for strong cybersecurity tools. However, cyber insurance is designed to help orgs mitigate and manage cyber risk in the event the incident does occur. Because protections can and do fail. When thinking of those targets of choice like Target and Home Depot, these orgs certainly have security teams in-house to manage their cyber risk, but still fell victim to cyber attacks. There's no such thing as a cyber silver bullet. Protections can and do fail. All right, to the big one, I think if our clients are at all aware of cyber risk, I think this is the one we'll probably get hit with the most. I already have coverage of my existing policy. I have it on my bot. So what does package cyber insurance actually cover? Well, we've got network info security liability is typically boilerplate on a BOP endorsement. They're going to cover regulatory fines, and they might cover a few other sub-limited third-party related costs. Standalone cyber insurance is much broader, right? We're going to cover this breach response costs, like the legal fees, forensics, PR recovery, credit monitoring, those regulatory fees. We'll cover cyber extortion and ransomware, which I know is hard to find on a BOP endorsement. We'll cover stolen funds, lost business income. One of my favorite that people don't always think about with cyber, because it's like a physical good, is the computer bricking and replacement. There's also technology failure coverage and a lot more. And remember, not all cyber policies are created equal. At Coalition, we have active protection, which works to continuously spot and help you mitigate risk. We're going to scan the publicly accessible internet to assess risk factors for cyber and more. We're going to send automatic notifications when risk levels change to the broker, you, and your policyholder. And we can offer support and technical expertise to close technical issues rapidly. Traditional insurance really only focused on the quote, claim, and renewal experience. But we all know that digital risk is amorphous, changing and evolving all the time. That's why active protection is such a vital tool managing digital risk. We continue to scan and assess risks on both a global and individual level. When new threats arise, be it a new type of ransomware, system vulnerability, or threat actor, we alert you, our brokers and independent agents, and our policyholders almost immediately. Coalition also offers help via technical experts who can assist in steps to patch software, update operating systems, and provide some guidance on where to go for more info. This kind of support can be vital to smaller organizations that don't have a large IT team or may not have an IT person at all. While Coalition isn't anti-ransomware or antivirus software, we can truly help orgs identify and fix issues before they ever become business stoppers. I think that's huge. So talking about here some case study, little disappearing claims, right? So April 1st, 2020, 9:21 a.m., policyholder receives an automated security alert for a critical malware infection sent to a policyholder. April 1st, 2020, 10:32 a.m. The director of IT at the policy holder's business responds asking for a call with Coalition's incident response team, or the IRT. By 3:30 p.m., our incident response team successfully resolved the issue for the policyholder. Imagine had this had been another carrier. I won't name any names, but I know of several more legacy carriers where if you call in a cyber claim, next thing you're getting is a referral to an attorney in your state to help you with the legal repercussions of this. And hopefully they have a referral to somebody with forensics and IT background. I love this example. And we need to remember that cyber insurance has really evolved to meet these emerging threats, right? We have protection from, it really can't be an afterthought anymore, right? I think for a lot of our small business owners, it still is an afterthought. However, educating ourselves here in this group, we can truly make sure it's not an afterthought. We also need to keep in mind these standalone policies, it's broader coverage and protection for your insureds. Like if you have to file a claim, much like I always think of a homeowner's policy, right? Like if I was selling an HO3, I always made sure I added special personal property and sewer backup coverage and roof matching and siding matching. And if my customer thought it was overkill, I probably gave it a couple tries. And if I needed to, I took it off. But we need to know that we're making the attempt to offer the right level of coverage first. And we need to remember that not all cyber insurance, whether it's packaged or standalone, is created equal. And then finally, cyber coverage costs too much. So, I mean, we know cyber risk is real for every business and the cost really can be catastrophic. Remember, overall, we've seen a 28% increase in severity, average loss cost being 197 grand. Going back to consumer staples and energy, those entities have had like a 40 and 23% increase respectively in the severity of their claims. This severity increases across the board with all of the key cyber events, but for FTF. Sorry, I'm looking at a claims example here. Last year, we calculated the number of reported claims where a payout was made divided by our earned policy count over the period, and our claims frequency stands at 2.4%, a small increase from the 1.6% increase we saw last year. That increase is still significantly below the claims frequency of the overall cyber market, which we get from the National Insurance Commission. So keep in mind, as we discussed earlier, these active monitoring controls we provide you and your insureds help Coalition keep our average claims frequency down. And when we think about the macro view of this, right, if we can keep our claims frequency down at Coalition and we can keep our claim severity down, we know that our rates are going to be more level at renewal than our competitors. We made sure at Attune that on a commission side for this, we offer you 15% new business commission and 15% renewal, because I know we're going to be the most attractive offering at renewal. And I wanted our independent agents to have a really great, solid reason to keep business on the books that included you getting fair compensation. Just a little Attune plug there. We also need to keep in mind here, you know, when thinking about the policy cost too much, right? Most businesses still think of cyber insurance in terms of what can I get sued for? But there's a lot of additional other costs that you need to consider. We need to think about a breach response coach, right? Overseeing these regulatory and notification obligations. We need to think about like negotiation from a technical and forensic expert, like we have a ransomware attack. We need to investigate and remediate, but we also need somebody who's good at negotiating with these threat actors to make sure that we don't end up getting systems bricked or something bad happening. And then also, I always think it's pretty cool. Coalition keeps a lot of cryptocurrency on hand because we know that's a preferred method of payment for the threat actors. So we are prepared whenever it's necessary to pay these folks off and get access back as quickly as possible. And then the business interruption side, I think, is a really glaring hole in that BOP endorsement side, right? You know, if your business grinds to a halt for a day, hours, you could lose a ton of business if the timing is right on this attack. So we're going to subsidize that business interruption as well. Now, when we think about the overcoming the objection of cyber coverage costs too much, what I love about the quoting platform we have here at Attune is we're really making cyber coverage accessible for you. You know, traditional insurance, like the pricing was pretty one size fits all. The coverage was pretty standardized, and limits, in my opinion, were relatively low. On this active cyber insurance model, our pricing and underwriting is really tailored to each individual business's risks. We look at real-time data. If you think back to any of our portal demos we've done in these webinars, you know that when you give us your insured's domain, we run a in real-time risk assessment, checking every place that your insured touches the public internet to make them aware of any critical vulnerabilities, and also praise them on positive security behaviors they're implementing now. We also have modular coverage based on individual businesses' needs. So we're not going to force you into prepackaged plans. We're going to let you select coverage a la carte, which oftentimes helps you create a more tailored fit, which is going to help you sell to your client better. And I mean, ultimately, you can't afford not to buy a cyber policy, right? The frequency and severity of these claims is on a rise. Legal, forensics, business interruptions expenses can't be ignored. And policies really can be easily tailored to fit each insured's needs. So let's talk a little more about active insurance. We call it active insurance, and it's really designed to prevent digital risk before it strikes. Ramon and Bill and John, sorry, you're going to hear this one from me again, but when you buy a cyber policy from a traditional cyber carrier, it's much like the traditional insurance buying process, right? You run a quote, we sell our insured a PDF and a promise. That carrier takes this box, they put it up on their shelf, and they wait to hear something from you until renewal. If your insured realizes they experience a breach or some kind of event, they're going to take this box off the shelf, dust it off a little bit. They haven't looked at it in a while, open it up and say, well, I wonder what happened. Here at Coalition, that's why we call it active insurance. We designed this to spot and prevent digital risk before it strikes. Active insurance combines technology and traditional coverage to go far beyond quote, claim, and renew. And I love this little diagram our marketing department came up. I think it's beautiful. So we have this great active protection. We're monitoring and alerting to identify any risk before it escalates. If something does happen, we have active response, right? These in-house experts that can accelerate response and coverage if the incident happens. And then in real time, at any time, your customer can continue to look at active risk assessment. So as we view these cyber risk assessments over time through this webinar series, know that the first risk assessment you hand your insured should not and will not be the last one they look at if they become a policyholder. Through our system, Coalition Control, your insured can go run risk assessments on their business anytime. I, Brennan, am a small business owner. I see on the risk assessment that I need to make some improvements. I go ahead and buy my Coalition policy, implement some additional security controls. Next thing I'm going to go do is hit the button and I'm going to test it and see how I do after implementing those, because I want to make sure that my business is actively protected. And remember, this active insurance, I mean, it really just offers better protection. By 2021, Coalition policyholders filed 70% fewer claims than the industry average, 70%. These claims are oftentimes resolved at no cost to the policyholder. Remember, thinking back to our last webinar, 46% of incidents going through our instant response team are handled at no cost to your insured, almost half of them. That's crazy. So, I mean, just again, keep in mind, our coalition policyholders fired a third as many claims as the industry average in 2019, and we're expected to show very similar results for 2022 in our look back. We're also here to support our brokers, or I like to say independent agents, transition into this digital economy. This is truly still the beginning of our active insurance model. We're here to support our independent agents as you move into this digital economy, and we're here to offer in-depth knowledge, online support, and monthly training and webinars. We're going to have a lot more to come. And I think, you know, just to go back, this prevailing conclusion of our team was that this is one of the most innovative solutions we've seen in some time, right? That's from one of our brokers in 2020. Other feedback we've gotten, I'm going to read a couple off here. You guys are the real deal. We just purchased a cyber policy with you about a couple months ago, and wow, am I impressed. This one is funny, and I'll leave it alone, but we're gobsmacked. I know that how quickly Coalition mobilized is why we're recovering that money on the FTF. Thank you, thank you, thank you. That's a policyholder from 2019. And I mean, frankly, the list goes on and on. The people that are happiest and most impressed with Coalition are people who have experienced an incident and we've had their back. So we have 5 answers to your objections. Keep in mind, we're going to share this information with you later today. But just remember, everyone's a target. Even basic technology can create risk. Protections can and do fail. Cyber insurance has evolved to meet emerging threats. And ultimately, when we keep all that in mind, you really can't afford not to buy it. And hey, that's all we've got for today. So I really wanted to slow down and open it up here and see what questions does the group have here. Is there anything you want me to go back and review? How can we help you? And if there's nothing, that's okay. Maybe we were just that comprehensive. Great question, Phil. Monitoring is not done through an app. So logging into Coalition Control is just like logging into a carrier portal on your browser. However, we're going to have several methods of push notifications. We're going to enable email alerts, text alerts, phone calls, along with push notifications through the Coalition Control dashboard, which, like I said, you can log into through a browser. Great question. We get that one a lot. I see one here. Where could I gain access to marketing material? Great question. Morgan's going to include some in our follow-up email today. Also keep in mind, please reach out to your account manager at Attune. Our help center at Attune has a lot of embedded information. And myself, my team, we're all here equipped with lots of marketing materials to help. Great. Good questions all around. All right, I see one here from Edgar. You missed the prior webinars. That's okay, Edgar. So I think you're asking, hey, if there's a first claim, will it affect pricing? Yeah, it will. Just like with any other carrier product that we sell, a claim will affect pricing. However, what I always go back to is, one, I think we're very fair and tolerant with our policyholders. Two, know that when you go through and you read our application, No question on this app is a knockout. And the first question we ask you on our cyber application is, has your insured suffered a cyber incident, covered or uncovered, in the past? And that is not a knockout question. Okay. At Coalition, we're very big on security controls and education for your customer base. So if we do see that there's a breach, one action we're going to take post-claim is helping your customer mitigate these losses from happening again. And if we're confident in the security controls and measures your insured has in place, we will keep them on the books, albeit with a slight premium increase. Tyler, great question. We are happy to get you more info for our target markets on cyber. I gotta tell you, really past our list of exclusions, most of the markets I've seen quoted have been extremely competitive. And keep in mind, our excluded, HO5 here, I'm going to explain exclusions, not coverage, because it's way easier. We don't want to cover casinos, gambling, adult entertainment, data aggregators or managed service providers, or cannabis. Everything else we can typically take, and that's between our admitted and surplus product offering. But Tyler, unfortunately, at this time, we're not covering managed service providers. And as I explained earlier, it's for us, it's not a smart play with risk this time. Great question. Ooh, I've got Rachel here asking, how can I see your previous webinar about cyber insurance? I'm so glad you asked. If you check out our YouTube channel, you'll get to see Morgan and I talked a lot about cyber over the past several months. I know we have them all recorded. Morgan, is that the best place for somebody to go check that out? YouTube, perfect.
Yep. And I will be throwing that link in the chat so you don't have to worry about searching for it.
Thank you, Morgan. It's funny, you'll if you go back and watch all the webinars, you'll actually see me become more educated about cyber insurance, because y'all, it's relatively new. And I'm a former independent agency owner. Before that, I was a captive agency owner and producer. And I'd been selling cyber BOP endorsements for a long time, feeling real good about it. And boy, did that change. Absolutely, Rachel. Thank